What is going on, guys? Luke here today to explain why Tesla just ate it after a great earnings call, losing 15%, and Apple did the exact opposite, and it soared over 10% after its earnings call. I'll go in depth on why both stocks traded how they did and show you how you can make a profitable trade next time around and not be the one wondering, what the freak? I said freak. So let's get started right now. Welcome back, everyone. In this video, we will talk about why Tesla fell after earnings. It might not be for the reasons you think. And we'll talk about why Apple exploded after its earnings call, how you can profit big the next time around, and as a bonus, I'll tell you what I do personally ahead of every earnings call for every stock I own or want to own. So if you're a new investor, this information is critical to your trading moving forward. And if you've been investing for a while, but you didn't see this coming at all, I've got you covered as well. So hit the like button, as it really does help the channel. And hey, I'll return the favor by helping you with your investing. Is that whatever, I'm not sure, whatever. Doesn't matter. So if we have a deal, let's jump into this. So why did Tesla fall after earnings? Tesla had a great earnings call, beating the analyst projections and most people's expectations by having a great quarter despite being shut down for several weeks at their main plant in Fremont. And usually when there's good news about Tesla, even if it's just something like Elon successfully flushing his toilet, Tesla seems to run up 10% on even modest news like that. I mean, look at what Tesla did after Elon subscribed to my channel. Simply amazing success for something as easy to do as subscribing. But beating earnings during the illness was an incredible feat. But after spiking up big in after-hours trading after the earnings call, it fell over 15% the next 2 days. Why did it do this? What the heck is going on? I've heard some talk about the tax credit used to boost the profits, and if you think that is why it dropped 15%, you would be wrong. They have been using those tax credits to boost profitability for more than a year now. So this time around, Tesla uses them again and it's going to produce a 15% loss for you? I've even heard it's just because Wall Street hates Tesla. That's not really how that works either. Yes, some short sellers who don't like Tesla because they want to make money on their short positions, that may be true. And there may be others who just may not like Elon altogether. But Wall Street loves money above everything else, and they like winners. Tesla has been making a lot of people a lot of money, and they are winning in their space. So the idea that it fell because Wall Street doesn't like them is just silly. The reality is, and nobody wants to admit it, the writing was on the wall well ahead of their earnings call. And we actually talked about this exact point in my earnings preview video. I'll link that thing at the end so that way you don't have to find it. It'll just pop up on the screen right there for you if you want to check that out. The fact is, when they announced their delivery numbers, most felt a profitable quarter was coming, which would trigger inclusion in the S&P 500. Earnings would beat estimates, obviously, and enthusiasm for the stock was going bonkers. And of course, the stock ran up accordingly. Come on, Elon even released short shorts. It can't be any more telegraphed than that. Look at this chart right here. It tells the story. Although possible, it was highly unlikely you were going to get another bump up for just meeting the current expectations. Look at the bump you got right now just for the delivery numbers. The delivery numbers set a new expectation that was so high, Tesla would have a very hard time meeting them. The only way Tesla could have ran up further would have been a record-setting earnings call that blew even what Tesla did out of the water. It would have had to have been over the top incredible, which is kind of like what we saw with Apple. So why Apple exploded after earnings? So the talk around Apple in the run up to earnings was the assumed decline in iPhone sales due to this whole illness situation. And how, in this illness economy, could Apple continue selling its products and services at a very high level? It just didn't seem possible. And with the biggest seller, the iPhone, being down, or at least presumed being down, you would think Apple would falter, and the stock actually traded according to that narrative. But while everyone thought Apple's numbers would be down for the quarter, we saw the exact opposite as Apple put up some of its best numbers ever. Earnings per share were up 18%. Revenue was up 11%. And they even announced a 4-to-1 stock split that I covered in a different video. I'll link that video at the end too, so you don't have to go find it. But it was a great earnings call. All right, so let's try a little bit of public reading again. Apple's record June quarter was driven by double-digit growth in both products and services and growth in each of our geographic segments, said Tim Cook, Apple's CEO and subscriber to my channel. In uncertain times, I knew I would screw it up. In uncertain times, this performance is a testament to the important role our products play in our customers' lives and to Apple's relentless innovation. See, public school did me well. So whereas Tesla had all the good news priced in ahead of the earnings call, and only an incredible, out of this world earnings call would have ran it up further, Apple did not see the type run up Tesla did before earnings. Look at the chart for the week leading up to the earnings call for Apple. And then they blew it completely out of the water with a great call, and hence why you see such a big run up. So as complex as we all try to make these explanations for why trading seems to make no sense at all, and don't get me wrong, there has been plenty of times that it's absolutely true and it has made no sense at all to anyone. In most cases, with just a little bit of analysis, the answer is actually pretty simple. So how can you profit big the next time around? So this is the big question that everyone wants answers to, and earnings calls are some of the trickiest times to navigate. I'm just trying to be honest here. This is simply because a stock is never more manipulated or played around with or just more volatile than it is around earnings time. But there's an overarching theme you have to grasp if you're going to trade and profit big around an earnings call, and that is expectations. If you notice in both examples, the catalyst for both events, trading up or trading down, was the expectation before the earnings call. Tesla's expectations changed when the delivery numbers were announced before the call. Now, Wall Street's guidance may not have changed, but traders' expectations did change, which, by the way, is not measured anywhere, but those traders' expectations were absolutely raised immensely. Now Tesla was expected to do unbelievably great, and given how the Tesla hype train works, unbelievably great turns into unbelievably incredible, which turns into Tesla going to the moon in just a matter of a few hours. So although I had no idea how good their earnings would be, I knew the expectation was sky high and probably not reachable. And because they were sky high, it actually reduced the likelihood by a lot that Tesla would meet those expectations, which reduced the chance of making money after the earnings call. And the exact opposite was true of expectations with Apple. More analysts and people in general had it not meeting expectations. So when they blew expectations completely out of the water, it was a surprise, and therefore the stock ran up huge afterwards. But let's take this one step further and walk through what would have happened to Apple if they would have just had a mediocre earnings call. You know, just mediocre, or actually not that good. Apple still would not have fallen 15% like Tesla did, even if they missed more targets than Tesla, because the expectation was already there for them to miss a few. So even with a worse earnings call than Tesla, they would have essentially met the expectation and would not have dipped 15% like Tesla did. You have to analyze the expectation ahead of time to see what the stock has to do in order to give you a run up after earnings. In this case, given the expectations that were out there, you had a much better chance, remember it's percentages, nothing is 100%, but you had a much better chance at making big profits with Apple than Tesla around the earnings calls due to the much lower expectation for Apple and the sky high expectations for Tesla. So what do I do personally ahead of every earnings call? Now remember, this is my opinion and for entertainment purposes only. Do not listen to me. As we just talked about, a stock is never more manipulated and never trades more irrationally than it does around earnings. And if you follow my channel for any length of time, you know I believe in planning and knowing what you are going to do in every scenario well ahead of those events actually happening. Because of this, I actually never trade during or shortly after earnings week. Instead, I view earnings calls completely different, and I'll explain it right now. Not right now, but right now. Well, they're kind of the same. Whatever. If I believe in a stock, like I do Apple and Tesla, earnings calls will present two things for me. The first, a buying opportunity. If the stock trades down, but I believe in the stock long term, and nothing in the call points towards a fundamental problem that changes my outlook on wanting to own the stock long term, then I just got a discount on the stock and it's turned into a buying opportunity. And the second, it also represents an opportunity to really assess the company and plan out my next set of moves. Forget about the hyped up YouTube videos and articles about an earnings report. The company just gave you a treasure chest full of information for you to digest and see how the company sees things going into the next quarter and the rest of the year. You need to deep dive those numbers and analyze them. If you don't know how to do that, jump in there and start learning. Start doing some research. I'll actually teach you how to do that in my course that's launching real soon, but you don't have to wait for that. Start learning now. And there are clues sprinkled into the actual earnings calls themselves. Listen to those 2 or 3 times and take notes. CEOs are very careful in their wording on those calls, but does it sound like they are overselling good news? Are they downplaying bad news? Yes, you absolutely have to read between the lines. But if you combine your notes there with the financials that they released and gave to you, a picture should start to form. If those two things don't really line up, then you know they either undersold the bad or oversold the good, or vice versa. So the insight you're gaining right there is incredible. If you have not deep dived the numbers and listened to the full earnings call and took notes at least twice, then you are missing an incredible opportunity to be a better trader and to have insight into that company. So follow me on all the social media platforms in the description so you know immediately when the program is live, and subscribe too, as I will announce it in a video with a special offer. And make sure you like the video, as you know, we had a deal. And consider joining my Patreon if you want to see my trades in real time and to get direct access to me, which you cannot do anywhere else. And sign up for Webull if you don't have a trading platform and get your 2 free stocks if you deposit $100 into your account. But I think it's going to be a crazy next few weeks. So make sure you are subscribed, which you can do right there, so you can get the truth on all the craziness. And here are the videos I promised about Tesla earnings call and Apple stock split. Thanks.